Good morning, everyone, and welcome to Weekly Profit Talk. And happy June, by the way. Almost summer is almost upon us. Good morning and welcome. Each week we talk about things affecting the bottom line of your medical practice, and quite often we have a conversation once in a while that the information will spill over to other businesses because sometimes the things that affect profit are basically the money coming in, the money you spend to make the money, and subtract one from the other, and you have net income. So quite often there is some spillover there. But let us move forward with this week's topic, and it is specific to medical practices. The topic is the $94,000 hiding in your otherwise successful medical practice. So let's begin, shall we? Let's say, for example, that you're running a psychiatric practice in your own specialty, and you've got three providers. You're bringing in roughly 1.4 million gross revenue before all overheads. You've got clean books, an accountant says everything looks great, right? On paper, you're winning, but in a single working session, a CFO could walk into the practice and find roughly $94,000 in that practice that you didn't know was being left on the table. Let's talk about that. Finding number one. Let's say, for example, you've got a profit leak that your P&L isn't seeing. You're paying yourself a reasonable salary from your S corporation, or what you believe is reasonable, at $280,000. Clean, simple, and I'm saying that it's quite likely at least $18,000 more in payroll tax than you need to pay. Now, I'll talk about reasonable compensation. Nobody wants you to pay yourself more than your business is making. So, reasonable compensation, in my mind, is the lesser of what the industry would uh, basically cost to replace you in your role, or um, around 45 to 50% of the net income, including wages that you bring in. So, if you've got a scaling business, for example, and you're only making about 300 to 350,000, then 280 is way high. Okay, um, so this profit leak could be costing you many thousands of dollars. A defensible, reasonable salary plus distribution structure would shift compensation out of payroll tax and into ordinary distribution. Same money in your pocket, materially less to the IRS. I'm very happy to talk about that in more detail if you ever want to reach out and book time with me in the near future. But we have many strategies to keep thousands upon thousands of dollars in your pocket. In this case, um, and this is a hypothetical. I'm not going into a lot of the how the sausage is made, bits behind how we're coming up with the numbers. But let's say um, that you're overpaying $18,000 in payroll tax. Your accountant didn't catch it because compliance work looks back. It's basically a history lesson. Financial statements tell you how you did the previous month, the previous year. A CFO looks forward and asks you whether what you did was the right thing to do in the first place. So, surfaced value, roughly 18,000 a year. Moving on, finding number two, a cash problem wearing revenue clothes. Revenue is growing, but the bank balance isn't. This is not a revenue problem. Now, this is fairly frequently a problem for many medical practices. And let's say in this specialty, days in AR happen to be sitting for our hypothetical psychiatric practice at 52. And that basically means that it is taking 52 days from the point of claim submission, date of service, to final payment, including all co-insurances from the patient. Okay. Against a healthy benchmark closer to 32, that 20-day gap on that 1.4 million in annual collections is roughly $76,000 of your own cash sitting in insurance company limbo at any given moment. Fix the billing rhythm, free the cash, retire the line. Surfaced value, roughly $76,000 in freed working capital, not to mention the interest that you stop paying on it. Finding number three, a tax decision being made backwards. Now you'll see if you scroll down to the bottom here. I don't really have a dollar amount on this, but let's say you plan to make a retirement account contribution in the fall, once you see how the year goes. Saying that and saying it out loud, look at where you are, look at yourself in the mirror. It's basically a deduction being left to chance. If you properly structure your retirement plan, fund it on a schedule, and thought out in the first half of the year, at the very latest, you have the potential of locking in this contribution, building a forced savings discipline into your practice's cash rhythm, and let your tax position be designed rather than figured out. The dollars here vary by plan type and contribution level, but the principle doesn't vary at all. Smart tax strategy is not what you rush to do in April. It's what you decided in May. Okay? So the math, plainly, profit leak about 18K, cash trapped about 76,000 working capital on those that days in AR float. So tax strategy is a deduction designed instead of guessed. Rounded off, call it $94,000. See what we did there? So your unique findings are going to be different. Perhaps your gross revenues are less, or they may be even more. But are you willing to wait until the end of this year to find out? My guess is you probably aren't. So let me talk to you further about what I brought up on the first slide, second slide maybe, and that is having a conversation with a CFO level advisor that can help you and guide you through not only nurturing your cash, but micro forecasting at 13 weeks in advance or 91 days. So that and some profit and loss projection, making decisions based on data instead of on feeling. Um, just imagine what you could do. You basically have uh, somewhere around the average of $94,000 hiding in your own practice, depending, of course, on your own volume. So why don't we talk about it? Let me tell you how. I'm coming to you on one of three media here. You're watching this either live, if you are, hello, and thanks for joining me, or on replay. Either way, you're on either YouTube, LinkedIn, or Facebook, and all three of those have a comments capability in common. So if you throw in the comment more information or help or free meeting, we will get back to you within 24 business hours, and we'll tell you how to book that free meeting, 30 to 45 minutes in a discovery, to have a conversation and find out if what we do resonates for you and if what you do will resonate for us and if you're the kind of person that we want to work for. But chances are, if you're the sort of audience that I've been addressing for the last 8 or 9 minutes, I'm certain that the answer would be yes. So let's find that out. You can also go to owingsllc.com. There's a work with me click on there, and I won't give you a bunch of URL to remember. You can write to Eric, ERIC, at owingsllc.com. That's my email. I read them every day. So, one way or another, reach out and let's talk about how we can make your practice more profitable and get you down the road to spending a lot less money on tax. So, if that sounds good, then I look forward to hearing from you soon. So, have an amazing rest of your Wednesday and happy first week of June. Have an incredible rest of the week. And if you have a chance today, do something randomly kind for a stranger. So until next week, so long, and we will see you at 8:30 a.m. Mountain Time next